I started with just $1,000 in my bank account 7 years ago. Today, that money has grown to over $50,000 without me adding a single extra dollar. No crypto gambling, no day trading, no get-rich-quick schemes. Just one simple strategy that anyone can copy. Welcome back to Cashflow Kingdom, where we break down personal finance without the confusing jargon. I'm going to walk you through exactly how I used compound interest to multiply my money by 50 times, show you the real numbers from my actual investment account, and give you a step-by-step plan to do the same thing starting with whatever amount you have right now. Here's what most people get wrong about investing: they think they need thousands of dollars to get started. That's complete nonsense. I started with $1,000 that I scraped together from a part-time job in college. The key isn't how much you start with, it's how early you start and how consistent you are. When I put that first $1,000 into a low-cost index fund, I wasn't thinking about getting rich quick. I was thinking about letting time do the heavy lifting. And that's exactly what happened. Now, before we dive into the numbers, I need to mention that this isn't financial advice. I'm just sharing my personal experience and what worked for me. Your situation might be different, so always do your own research or consult with a financial advisor. Let me show you exactly what I did with that $1,000. I opened a Roth IRA and invested it all in a total stock market index fund with an expense ratio of just 0.04%. No fancy stock picking, no trying to time the market, just boring index fund investing. The fund I chose tracks the entire US stock market, which historically returns about 10% annually over long periods. I set up automatic investing to add $200 every month after that initial $1,000. Some months I could afford more, some months less, but I averaged about $200 monthly for the first 3 years. After that, I increased it to $300 per month. The beautiful thing about index funds is that you're essentially buying tiny pieces of hundreds or thousands of companies all at once. When Apple does well, you win. When Microsoft crushes it, you win. You're not gambling on individual stocks, you're betting on the entire American economy. Now let's talk about the star of the show, compound interest. Einstein supposedly called it the eighth wonder of the world, and after seeing my results, I understand why. In simple terms, compound interest means you earn returns not just on your original investment, but also on all the returns you've already earned. It's like interest earning interest, which then earns more interest. Here's how it played out for me. Year 1, my $1,000 grew to about $1,100. Not exciting, right? But by year 3, I had about $8,500 total, $6,600 from my contributions plus $1,900 in growth. By year 5, compound interest really started flexing. I had contributed about $15,000 total, but my account was worth $22,000. That extra $7,000 came from my money making money. Now in year 7, I've contributed roughly $20,000 total, but my account is worth over $50,000. That means compound interest has generated $30,000 in gains. If you're finding this helpful so far, hit that like button and subscribe for new money tips every Tuesday. It really helps the channel reach more people who need to hear this stuff. Here's what I wish someone had told me when I started: consistency beats perfection every single time. There were months when I could only invest $50 instead of my usual $200. There were months when I invested $500 because I got a bonus. The key was that I never stopped investing completely. I also never tried to time the market. When COVID hit in 2020 and the market crashed, I kept investing. Actually, I invested more during those scary months because everything was on sale. When the market hit all-time highs last year, I kept investing. Market timing is a losing game for regular people like us. Dollar cost averaging, investing the same amount regularly regardless of market conditions, smooths out the bumps and removes emotion from the equation. If you're wondering whether to start investing now because the market seems high, remember this: time in the market beats timing the market. The best time to plant a tree was 20 years ago. The second best time is today. I almost sabotaged this whole thing multiple times, and I want to share those near mistakes so you can avoid them. First, I almost pulled everything out during the 2020 market crash. I watched my account lose about 30% in a few weeks and panicked. Thankfully, I posted in an investing forum and got talked out of it. If I had sold then, I would have locked in those losses and missed the incredible recovery. Second mistake I almost made was switching to individual stocks after reading about people making millions on Tesla or GameStop. The FOMO was real. But I remembered that for every person who got lucky with meme stocks, there are thousands who lost their shirts. Boring index fund investing isn't sexy, but it works. Third, I almost stopped investing when I wanted to buy a car. I'm glad I found other ways to save for that car because those missed months of investing would have cost me thousands in future growth. Ready to start your own compound interest journey? Here's your step-by-step action plan. First, open either a Roth IRA if you want tax-free growth in retirement, or a regular taxable investment account if you want access to the money before retirement. I recommend starting with a Roth IRA because of the tax advantages. Second, choose a low-cost total stock market index fund. Look for expense ratios under 0.1%. You don't want fees eating into your returns. Companies like Vanguard, Fidelity, and Schwab all offer excellent options. Third, set up automatic investing. Even if it's just $25 per month, automation removes the temptation to skip months or spend that money elsewhere. Fourth, increase your contributions whenever possible. Got a raise? Bump up your investment amount. Tax refund? Throw it in there. The more you can invest early on, the more time compound interest has to work its magic. And remember, this is a marathon, not a sprint. There will be scary months when your account goes down. That's normal and expected. Stay the course. Let me put this into perspective for you. If you're 25 years old and start investing $200 per month in an index fund earning 10% annually, you'll have over $1.3 million by age 65. That's the power of starting young and letting compound interest work for decades. Even if you're 35 or 45, it's not too late. The key is to start now with whatever you can afford and be consistent. My $1,000 to $50,000 story isn't unique or special, it's just math and patience. Anyone can do this if they're willing to live below their means, invest consistently, and resist the urge to panic when markets get volatile. The hardest part isn't the strategy, it's the discipline to stick with it year after year. But trust me, watching your net worth grow while you sleep is one of the best feelings in the world. And if you found this breakdown helpful, make sure to subscribe for new money tips every Tuesday. I share real strategies like this every week. So there you have it, my real journey from $1,000 to $50,000 using nothing but compound interest and consistency. Remember, this isn't financial advice, just my personal experience. Your results will depend on market performance, your contribution amounts, and how long you stay invested. The key takeaways? Start early, invest consistently, choose low-cost index funds, and never panic sell. If you want to see more real numbers and strategies, check out my video on the exact index funds I use that's coming up on your screen right now. And don't forget to subscribe if you haven't already. Thanks for watching, and I'll see you in the next one.